a somewhat noticeable 27, almost 28 million ounces coming out of SLV and these other silver ETFs. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics as we dig into the silver and economic news today on Thursday, June 30th. Hope everybody's getting set for a fun 4th of July weekend. And to get you prepared from a market standpoint, have some silver data and news to walk you through today, including the latest update from the silver ETFs, which is primarily SLV, but certainly a handful of others out there, SIVR, as well as others. And as you can see here, this column on the right, that's showing your 4-week change, and a somewhat noticeable 27, almost 28 million ounces coming out of SLV and these other silver ETFs here. A total of 32.8 million ounces over the last 4 weeks, if you include the COMEX numbers. Taking a look at the chart here, you can see these red lines. These are the last 4 weeks. So there's your 28. 2 weeks ago was a big week, and about another 7 million ounces coming out this week. Even the previous 3 weeks before that, metal coming out, and you can see that has coincided with the price decline. Certainly could see a lot of investors selling along with that, adding some pressure there. So just wanted to give you an update that we do continue to see metal coming out of there. Similarly, at a bit of a slower pace, slightly under 70 million ounces in the registered category. Again, if you take this chart a little bit back farther out, you can see more than the historical amount that has been in there, although quite a bit has come out ever since that silver squeeze weekend where there was 150 million ounces in the COMEX registered stockpile, and now less than half of that, which, to be clear, I would not by any means call that a run on the COMEX. There's still plenty of metal in there. We do have delivery day coming up today, June 30th. And at least as of Wednesday night when I'm recording, you see down to 6,323 contracts. So still a fair amount of silver left available for delivery, and we will know more about that perhaps by the time you're watching this. Although if you hit the subscribe button and notification bell, we'll keep you posted on that as we continue to cover these markets each day. So there is the COMEX depository. In terms of the bank positioning on the COT report, that did change a little bit this week. You can see the blue line showing that the commercials getting a little more short, although still on the lower end of the range of what you've seen over the past year and a half there. Although worth pointing out, here was a note, got permission from Craig Hemke to play. This was from his podcast on Friday, June 17th, although still worth pointing out, and we will play a minute of that here.
The large spec net long position falls to 14,000 contracts. The ratio, net long ratio, divide the short position and the long position, just 1.32 to 1. Both of those, the lowest we've seen since June the 11th, 2019, 1 week before that June FOMC. And the same thing could be said about the commercials. Commercial net short position falls to 22,000 or so. Again, smallest since that same report, June of 2019. This is not immediate. Don't think that this means, oh, that must mean the Fed's going to have an emergency rate cut next week. No.
And just taking a quick look back on the silver price, you can see here we are in June of 2019. Let's call that $17 in the midst of a rally. Did plummet during COVID before spiking up back then. And you've seen there's a few times where it's gotten near that 30 mark. This was up about 29. Here is silver squeeze weekend where that peak was brief. So this chart not showing it getting over $30 for a day. But again, here was Craig's article for Sprott Money News. The large speculator net long position, just 14,000 contracts, smallest position since June of 2019. And again, here mentioning the commercial net short position, 22,000 contracts, smallest since June 4th of 2019. Where does that leave us? Well, traditionally, you would have thought that would be providing a bit of a floor in the markets. I'm still a little bit concerned about how this is going to go as the Fed continues to hike rates. We'll touch on a little bit of Jerome Powell's testimony with the ECB yesterday, which continues to seem that, well, I would say I expect his pivot eventually, that he is claiming to put up a fight against inflation, even though some of the Fed officials have commented that they see somewhere neutral in the 3% range. So, not exactly a Paul Volcker coming in, but we will see. And certainly another Fed meeting coming up later this month. Another note that this was mentioned in the interview I did recently with Bob Coleman when we were looking at the wholesale silver market. But an interesting thing that he mentions here, that for anyone who didn't happen to see it there, or even if you did, I think worth hearing again. So we will play a minute of that here.
Well, fast forward to March of this year when Ukraine got invaded. Barclays had they have a set of their exchange traded vehicles, but they're based on, like, they have silver and gold and different types of commodities. But what they do is Barclays has where they put their money into futures contracts rather than the actual underlying commodity. And so you had this massive move or massive flow of money coming into commodities when Ukraine was invaded, because you started getting dislocations everywhere. And that actually shot the contango up, and that made, so basically all this money that came into the market, where institutions were looking for securities to put, to get participation in commodities, because a lot of them can't just simply buy the physical commodity, and maybe against their charter. So when they went in, bought all these futures contracts, that's what created this big contango. But then at the end of March, it turned out Barclays was selling unregistered shares, so they had to roll back and basically unwind some of those contracts, because typically what happens is, like in an ETF, when you have to be able to create more shares. Typically you have them in a pool, authorized amount of shares that have been registered. Well, they were taking in so much money, they were selling so much shares that we're actually selling unregistered shares in the market. So that could have actually started some selling that started maybe back in April, because they had announced that in their quarterly report, and that's could have been why the futures market started selling off, and then you went into this backwardation. It's that's the part of the market that makes it very difficult for, like you and I, to kind of get a full comprehension of right off the bat, because we're always looking for what's moving the market, what's causing certain things to happen, and you think it's okay, it's banks, it's the Fed, it's this or that. But sometimes it just happens to be where certain things happen, that you don't really know necessarily right up front, but it's like now that you finally read it 3 weeks later, like, oh, okay, that makes sense.
So I know perhaps that doesn't help unravel much of what's going on in the silver world, but at least an example of the type of thing that can affect the price. Here was an article by Pam and Russ Martens. JP Morgan Chase and Citibank hold 90% of all gold and other precious metals derivatives held by all banks. I know a lot of people have seen this chart here from the OCC, although you can see here a note explaining that beginning January 1st, 2022, which is the beginning of that period where you see the spike, largest banks required to calculate their derivative exposure using standardized approach. Under that approach, gold derivatives are now considered precious metals derivatives rather than an exchange rate derivative contract, resulting in an increase. So not comparing apples to apples there yet. What I thought was interesting was when you come down here, they mentioned JP Morgan is last bank in the US that should have a $330 billion involvement in precious metals, certainly because back in September of 2020, the US Department charged them with rigging the precious metals. And they also have RICO charges against some of JP Morgan's executives. So a fair point, and the kind of thing that leaves me feeling that without JP Morgan involved, wonder what that whole picture would look like. But I will put the link to that article below if you'd like to take a look at that. Certainly interesting read. Here is a story from Zero Hedge from Tom Luongo, who I had on the show a while ago. And he had a quote here from Gazprom CEO Alexei Miller, who just put the situation in the starkest terms there is. The game of the nominal value of money is over, as this system does not allow to control the supply of resources. Our product, our rules. We don't play by rules we didn't create. This was from Sunday, June 19th, and the time since then. We've seen a somewhat unofficial or official default of Russian debt, a murky situation there, and also Putin talking about the BRICS going to a new world reserve currency. Quick note here on SLV, silver overdue for a spike higher, perhaps been overdue for a while. Although what was stunning to me was that the author, Paul Franke, points out if you do not follow precious metals closely, you may not be aware gold and silver buried in your backyard have beaten long-term stock returns since the year 2000. I was actually pretty shocked to hear that, not as much with gold, but with silver, where if you take a look back at the chart, silver has basically quadrupled, where even the NASDAQ, as well as the Dow Jones and S&P, around a three-bagger. Now, certainly that was including the peak of the internet bubble. So you could find different points to measure from where that would not hold true, but just an interesting note that I hadn't even thought of, and I'm guessing many others had not considered either. In terms of some fiscal news, continuing to hear talk about student loan debt cancellation. Here, the U.S. to cancel $6 billion in student loans for 200,000 defrauded borrowers. And we'll see if there is more of that coming. I know there's been speculation out of the Biden regime. Who knows what they will finally end up with? Although, on a somewhat, I don't know if this is funny or not, but even the Reserve Bank of Zimbabwe to introduce gold coins as a store of value, USD made legal tender. So the Reserve Bank of Zimbabwe taking a step up on the Fed here. And meanwhile, out of the West, G7 set to impose price caps on Russian oil. Unclear what this actually does. Seems a little odd that they are sanctioning Russian oil products further while we continue to hear reports of Europe not having access to enough energy. So, but I guess that's what some of the Western decision makers do. Here was some testimony out of Jerome Powell yesterday. When I saw this one, I thought, gee, it's hard to imagine that he actually said that. Although if you take a listen here, courtesy of Wall Street Silver, they had the actual clip, and I'll play what he said.
I think we now understand better how little we understand about inflation.
That's not very reassuring.
No, honestly, this was unpredicted.
Well, I don't know if it was completely unpredicted. We talked about it plenty here. Other people who have studied the Austrian business cycle have talked about it as well. And certainly that's why we're able to see in advance that he'd have trouble once he started raising interest rates, which is the case now. Last note here, just because I've seen a couple of these, IRS is making progress on tax return backlog, but millions remain unprocessed, including 11 million individual returns. Certainly unusual to hear that even the IRS having a hard time collecting its own money, but such is U.S. government. And in either case, that is today's news. Hope you found that helpful. This show was brought to us by Kuya Silver, one of the companies that is moving its Bethania project into production. They did just recently file a technical report summarizing the results of their preliminary economic assessment. David Stein will be joining me to talk about that next week, although he actually did give a first half update of where things stand with Kuya. And to find out a little bit more about that, we'll just click on the video coming your way now.